Okay, let's unpack this. When you think about global powerhouses in the digital asset space, places truly shaping the future of crypto, what comes to mind? If you're like most, maybe you picture Silicon Valley, perhaps financial centers in Europe or Asia. But what if I told you there's a new, surprising player, not just emerging, but rapidly becoming a dominant force? We're talking about the Middle East, and specifically the UAE. Today, we're taking a deep dive into an eye-opening new report from Mining Grid. They're a leading provider of blockchain and Bitcoin solutions. And this isn't just about small shifts. Their data, spanning from July 2023 to June 2024, reveals, well, a really profound transformation in how this region has embraced cryptocurrency.
Yeah, what's truly fascinating here is the sheer velocity, the speed and scale of this shift. The UAE alone, get this, has recorded a staggering $34 billion. That's 124 billion AED in crypto inflows. It's a 42% year-over-year growth. I mean, that positions them not just as a significant player, but as a truly pivotal one. It really challenges existing assumptions about where the next wave of digital finance is coming from.
Right. So our mission today is to understand what's fueling this monumental surge. Who are the key drivers? And critically, what does this all mean for the future of digital finance for you, wherever you were listening? How did this region go from sort of curious to committing so quickly, and what can we learn from it?
The report lays out some incredible figures. I mean, that $34 billion in crypto inflows between July 2023 and June 2024, and over 500,000 daily crypto traders. That's a lot of activity. The UAE has officially moved from being merely crypto curious to, well, crypto committed.
Yeah.
It's solidified its standing as a major digital asset powerhouse and, frankly, the undisputed crypto capital of the Arab world.
And if we zoom out a bit, the entire Middle East attracted an astonishing $338.7 billion in crypto inflows during that same period. That's an 11.73% year-over-year increase. So solid growth across the board. This secures its position as the seventh largest crypto market globally. But here's what really stands out and kind of changes the whole narrative around this growth. Over 93% of that volume came from institutional-sized transfers.
Wow, 93%. Yeah. So this isn't just, speculative retail trading driving the numbers up. It signals a fundamental vote of confidence in crypto's long-term viability from, let's say, the traditional financial sector. It hints at a truly maturing market driven by long-term strategic asset allocation, and that brings a level of market stability you don't always see elsewhere.
Okay, so how do we interpret this then? What exactly is behind the UAE's ability to create such an ideal environment for this kind of explosive crypto growth, especially when, other regions might be lagging or seem a bit more hesitant?
Well, as Salman Arifai, who's a founder and board member at Mining Grid, he noted this pretty well. The UAE's strategic advantage really lies in its clear, forward-thinking regulatory frameworks. That clarity is key. And crucially, it's zero capital gains tax.
Oh, okay. That's a big one.
It absolutely is. This combination effectively de-risks the environment for investors and for businesses. It creates a really attractive landscape. You couple that with an engaged and sort of future-focused population. It's really no surprise the country has truly become the crypto capital of the Arab world. They've managed to foster an ecosystem where innovation can thrive, but within defined, supportive boundaries.
Right. And beyond the large institutions, you mentioned another powerful force, even more fascinating, youth adoption. The report highlights that over 74% of young adults aged 25-34 in the UAE show active interest in crypto, and a significant chunk, 21%, plan to trade within the next 12 months. This doesn't just feel like a trend, it feels like a genuine generational financial shift happening. What are the sort of broader implications of that, do you think, for the economy, for society there?
Yeah, that's a great question, and it raises another one. How are they discovering it? And what does it mean for their financial future? It seems social platforms like TikTok, WhatsApp, YouTube, they've become primary channels. This is fostering a socially connected generation that's pursuing financial independence. They're not just trading. They're learning, engaging, building communities around these new assets. However, there's a flip side. Nearly half of these young crypto users are concerned about misinformation.
Okay, that's understandable.
Definitely.
Yeah.
But it actually opens a crucial door for trusted educational platforms and responsible actors in the space to step in. Rami El-Zridi, the founder and CEO of Mining Grid, he put it quite well. He said the UAE has created the ideal environment where curiosity meets clarity. He mentioned, we're seeing a new generation that doesn't just want to invest in crypto, but wants to understand it, build with it, and lead its next chapter.
I like that framing. Understand, build, lead.
Exactly. It suggests this youth-driven interest isn't just about personal wealth. It's poised to shape the future workforce, drive innovation, and potentially redefine financial literacy in the region. He also pointed out something else interesting, a surge in Bitcoin mining.
Oh, really? Mining too?
Yes, driven by demand for decentralization, transparency, and, importantly, energy-conscious innovation. It reflects this proactive, future-oriented mindset again.
Okay, so it's not just the UAE making these significant waves, though they're clearly leading in many respects. The report mentions regional neighbors are following suit, right? Each with their own unique approaches. Saudi Arabia, for instance, recorded, what was it, remarkable 153% growth.
Yeah, 153%, quite something. And they lead the GCC countries in youth crypto adoption rates, too. So that youth wave is regional.
Interesting.
But what's particularly striking, I think, is Oman's distinct strategy. They're investing over $1.1 billion specifically in green mining infrastructure.
Green mining, so focusing on sustainability.
Exactly. Positioning themselves as a hub for environmentally conscious crypto mining operations. This isn't just about being green for the sake of it. It's a strategic move. It's future-proofing the industry, aligning with global sustainability goals, and of course, attracting environmentally conscious investors. It effectively turns energy consumption, which is often a criticism, into a productive, compliant asset. It really reflects a diverse strategic outlook across the entire Middle East. Different countries, different plays.
Okay, fascinating. So with all this activity, institutions, youth, different national strategies, what are these investors and traders actually using? Bitcoin maintains its market dominance, the report says. Ethereum's ecosystem resilience keeps other digital assets in the spotlight too. But there's one asset type that's apparently a true cornerstone of regional value transfer.
Yes, and this is really key to understanding the practical application here. Stablecoins. They now comprise a staggering 66% of all on-chain transactions in the region.
66%, that's huge. Why stablecoins specifically?
Well, this reliance on stablecoins is a huge tell. It indicates a strong emphasis on practical utility, things like cross-border payments, and just a general desire for stability in transactions. It suggests a move beyond pure speculation towards everyday use cases.
Got it. Makes sense.
And if we look at the bigger picture, another major trend is emerging: the tokenization of real-world assets.
Tokenization. We hear a lot about this. Things like real estate, bonds.
Exactly. Tokenization is essentially fractionalizing ownership of assets, like a building or a bond, onto a blockchain. This makes traditionally illiquid assets, things you couldn't easily buy or sell, small pieces of highly liquid and accessible to a much wider range of investors.
Right, opens things up.
Absolutely. And this has the potential to really transform how capital is raised and managed in the Middle East. It's driving significant new waves of institutional interest. And companies like Mining Grid, which serves over 60,000 users globally, they've played a pivotal role here. They're accelerating this adoption by sort of reimagining Bitcoin mining. They're not just seeing it as a computational process. They're positioning it as a way to utilize untapped energy resources, particularly renewables. So turning what was once seen as a power-intensive activity into a sustainable infrastructure play that actually supports the region's green initiatives.
That's a really interesting angle, linking mining back to sustainability and infrastructure. Okay, so as we consider this incredible momentum, these strategic shifts, the institutional buy-in, the youth wave, what does the future hold? Mining Grid analysts project some significant trends looking toward 2026. What can we expect to see develop further?
Yeah, they anticipate several key developments that are likely to shape the next couple of years. First, youth-led crypto accounts are projected to become the largest new onboarding segment in the region by Q4 2025.
Okay, so that generational shift keeps accelerating.
Exactly. It underscores everything we discussed about youth adoption. Second, Gulf countries are expected to continue exploring sustainable crypto mining practices, really doubling down on that green energy approach.
More Omani-style strategies, perhaps?
Potentially, yes, or variations on it. We'll likely see continued growth in mobile-first, gamified crypto platforms, too. That's crucial for mass adoption, making complex financial interactions intuitive, maybe even fun.
Right, lowering the barrier to entry.
Precisely. Then there's an expectation of increased institutional participation in tokenized assets, further legitimizing the space, and finally, an accelerated adoption of clean energy-backed mining models across the Middle East. So it's a very clear trajectory towards a more integrated, sustainable, and regulated digital asset ecosystem.
So, boiling it all down, what's the fundamental takeaway here? This deep dive reveals, well, a dynamic and rapidly evolving Middle East, with the UAE clearly at the forefront. It seems like they're truly solidifying their position as a global force in the crypto ecosystem. It's a powerful narrative of ambition meeting foresight, isn't it?
It really is. And if we connect this to the bigger picture globally, It suggests a profound shift in finance, a shift driven not just by speculative interest, which we see elsewhere, but by a powerful combination of strategic regulatory frameworks, robust institutional engagement, and that tech-savvy, future-oriented youth demographic. This region isn't just participating, it feels like it's setting new standards for how digital assets can integrate into traditional economies. And crucially, doing so with a clear eye on sustainability.
Okay, so a final thought for you listening. As you consider this powerful convergence, we've discussed the clear regulation, the massive institutional and youth-driven adoption, and the strong focus on sustainability in the Middle East. What does this tell you about the true potential and the future trajectory of digital assets around the world? How might this model influence other global financial hubs, and what opportunities or perhaps challenges might it present for you in your own corner of the digital world?